Hi viewers, welcome to the Momentum Moves weekly video series. Myself Brijesh Bhatia, senior researcher and editor at Equity Master. So this week it was largely led by bears, and if you remember in the previous videos, couple of videos, uh, we have highlighted that Nifty is at crucial resistance and could reverse. And also we highlighted Nifty range of around 15,200, 15,370 the last week video, as well as we also highlighted Nasdaq could reverse from the range of 13,750 to 14,000, and we have seen 13,879 as a high, and from there it's down by around more than 7%. And even if you look at the Nifty, it's down by more than 5% into the recent momentum. So what should we expect now? I guess from a trader's point of view, this week has been an amazing week. We have also seen an expiry, monthly expiry, where Nifty was on a positive note. Went back on Friday, ended on a negative note, forming the bearish island. So now what is bearish island? Basically, if you remember, on Wednesday we saw an upward momentum, though there was a technical glitch, but in the end we saw a huge upside momentum right from 14,800, 900 to 15,100 levels. On Thursday, the expiry, we saw a gap up opening. Markets held at the higher levels, and on Friday we saw a gap down opening. So the gap which was between the gap up and gap down is known as the island. So bearish island reversal is what we are witnessing on daily chart. And if you remember in the previous video, we have highlighted in the weekly basis, it has right at the highs of 15,430. Index has formed a bearish engulfing on weekly, and in the same week, if you are reading our Telegram post, so where we have highlighted an evening star candlestick pattern. So there are multiple candlestick patterns forming right at top, and again this is a very sign of a cautions for bulls as of now. And till the island highs, the bearish island high, which is around 15,170-75, is not taken out, the hangover of bearish momentum would continue. Now if we look at the chart on your screen, the Nifty chart, as we have discussed the bearish island over here, with that, if you look at the rising channel which we have included in our last week video, so the if you look at the momentum, we highlighted that 15,370 is the resistance level of the rising channel, and market have faced resistance over those and coming back on the downside journey. So southward journey has begun for Nifty, and we have seen right from 15,400 to 14,400 levels now, and we still think that markets is trending in a bearish momentum, and we might touch the lower levels of the channel, which is around 14,000. So the next week the minor hurdle can be at 50 days moving average, where with the recent momentum we have seen that the average has been respected very strongly by bulls, and every time those averages been tested, we are witnessing a positive trend emerging again. So 14,396 is the 50 days average. So if those levels are held, we might see a pullback. But we believe that if you look at the rising channel, and even if you look at the lower panel, the MACD has given a negative crossover the averages. So here the bears are having an upper hand, and last week video also we have indicated that bears are having an upper hand, and right exactly we have seen markets been tumbling down. So here we still believe that bears are having an upper hand, though every rise could be a short on rally could be expected in the coming week. And as I said, 15,175 is not taken out. We think that the hangover for bears will continue, and bearish momentums will prolong towards 14,000 level, probably 14,100 level in coming weeks. So look, traders should look for a sell on rise. Now, if you look at the second chart, the same channel has been converted into the Kagi chart. So basically, Kagi, if you look at the 45 minutes Kagi over here, and so it is clearly indicated that the momentum has been on the downward trajectory, and 40 minutes are generally the short-term charts. Now, if we look at the circled marked on the chart over here, so basically it is forming the lower shoulder, lower waist as per the Kagi, and basically in simple terms, if we say those who are following bar charts or candlesticks, is basically a lower high, lower low pattern. And generally Kagi gives more convincing lower high lower low structure when it comes to the momentum. So we believe that the lower shoulder, lower waist, the structure which is there, and again the highs are very similar. 15,165, 167 is the high of the previous shoulder, and on the island side 15,175 is the high. So 10-15 points plus minus here and there, you can take it at 15,200 levels. So these levels still are not broken on the higher side. We think that the Kagi chart is also indicating a short-term bearish momentum on the downside, and till these levels are not reached, you can look for a short opportunity on rise and keep a stop loss of 15,200. Those stop losses are slightly higher, but as soon as the days pass, these stop loss might come on to the downside when the lower shoulders are forming on the Kagi. So Kagi really helps you out to trail out your systems when it comes to the playing of momentum trades. Now, foreign investors, I have something. So in our previous video also, we have covered small cap to Nifty ratio chart in our fast profits daily. You might have watched that video as well. In case you haven't watched, you can watch that as well. And I've just taken an update over here. Why I'm including today is because I believe that small cap still has a stem to go higher. Now, if you look at the screen over here on your screen, there's a chart called small cap to Nifty ratio chart. So what I've done is I have divided small cap index price over the Nifty price, which means that small cap prices is divided by the large cap benchmark indices. So if I just look at the momentum right from 2018, the momentum was on the bearish trajectory. Now it has formed a huge base right from the March 2020 to 2021, probably you can say June also. So majorly 6-7 months, 8 months of bottoming formation has been happened in the ratio chart. Now if you look at the structure, it has broken out of the bullish head and shoulder, and bullish head and shoulder, when such bigger structure is formed and you see a bottoming formation in such kind of structure. So right from 2018 the trend has been negative. Now the trend has been emerging on the positive side, which means that small cap index is outperforming over the Nifty. And we believe that if you look at the 100 days average, that is the 100 weekly average, exponential moving average, and when this 100 weekly average, because it's just a long term average, and those averages been taken out convincingly now on the weekly scale. So with the bottoming formation, the longer term average has been taken out. We believe that the next couple of quarters could be the small cap indices outperformance, and definitely you should look at the small cap stocks, though we are not due to some SEBI guidelines, we are not recommending the stocks in this video, but you can certainly look for our small cap products which we have on our equitymaster.com. You can go over there and look for small cap products over there. But we believe that next couple of quarters, probably 2021, small cap would strongly outperform, and stock selection could be very wisely current point of time. So you should have to look at the downside risk as well when it comes to small cap. But looking at this structure, we certainly think that couple of quarters could be the quarters for small cap and mid cap over the large cap. So stock specific action could continue, and even if you look at the Friday's downside where markets were tumbling for 400-500 points on Nifty, some of the mid cap and small cap were ended on a positive note. So still there is a room for small cap and mid caps, and we still believe that small cap could continue to strongly outperform in the current scenario. So look for a small cap if you are looking for a buy on dip strategy into the markets. We believe that stock specific action in large caps could be cherry picked, but coming on to small cap and mid cap, we still think that the room is there for such stocks. So coming on to the conclusion, Nifty continue to remains into the bearish trajectory for a trader's point of view, and 14,100 is a level we are eyeing. Previous targets which we have indicated 14,400, 500 has been achieved, but we still think that the quantum of fall or the faster fall which is there in the current scenario, we think that that could prolong towards 14,000, 14,100. And one sector which we have previously highlighted as well is the IT and auto. We still remain bearish on such sector from a shorter term point of view, and Nasdaq is the one we have highlighted that it could go down and IT could play in sync with Nasdaq. So IT and auto space, we think that good downside momentum can be expected. And Nifty, you can look from a traders point of view as a target of 14,100 on the downside. But when it comes to the investing side, we think that small cap could be the one you should focus on if you think that market is on buy on dip. So, and we believe that small cap could strongly outperform in next couple of quarters. So before signing off, I would request, if in case you haven't clicked our subscribe button, do click to subscribe button, and do comment on how do you think our videos are helping you out. Thank you, Brijesh Bhatia. Do not forget to subscribe to my email newsletters, Fast Profits Daily, and get a free guide on how to trade markets like pro. Thank you.